entry.
possible for you to expand a little bit on the complex pullback? We kind of have a question about that.
Okay, what'd you say?
Can you expand a little bit on the complex pullback? Because somebody else asked in the chat, and I'd like to know your definition of what it is.
Okay, so complex pullback, anyways, is so let's say you're in a downtrend, right? And then in this downtrend, something like this happens. Okay, now when you measure out the swing of that move, and it isn't up to 50% of it, there is a very high probability that price is going to give a complex pullback, because at this swing there was no premium price taken, and premium price starts from 50% of the goal, right? And so what happens is price takes that premium price, moves into the short again, and that still makes up your bearish market, right? Okay, so that's what we call those pullbacks, where excess liquidity is left and premium price is unfilled. So price fills up in the trades. So that's what we call complex pullback, right? Okay. So next is exit. Where do you know, where do you get out of the market? At what point do you tell yourself that, okay, you know what, I've made a lot of money. This is the target I looked at for. Now I can close my trade. Okay, you know what, price has got into an area which I really, really didn't even think was going to get to. And at this point, I'm not going to get greedy. At this point, I'm just going to get out of the market. Or a situation whereby you're like watching price action, and while watching price action, you see that it is now showing you a lot of strong signs that it could possibly get taken out. Do you tell yourself to exit, or do you tell yourself to wait? That maybe that is just a pullback about to happen, and then you can maybe catch your entry. So there's a lot of psychology that goes into knowing when to exit the trade. There's a lot, right? A lot. And sometimes, and this happens when you're like deep down in profit. Okay. Sometimes greed comes into play and you're like, oh, this is gonna keep going, it's gonna keep going. And at the end of the day, it never keeps going, it just drops and takes you out of the trade. That's happened. That's happened to me a lot of times. I'm sure that's happened to every single person here as well. Times whereby you're in the market and you just go into the market and maybe price is 10, 15, 50 profit, and you're watching price action, but the candlesticks are not closing well, and there's a probability that price might just take you out of entry. So what do you do at that point? Do you now start knowing how to manage your risk at that point, or do you exit the market at that point? What do you do when it comes to getting out of the market? How do you handle the psychology behind getting out of the market? Right. So this is a whole lot actually. It's actually more than it is for entries, because entries are quite simple, but exits are one of the hardest things to pull yourself into, to commit to. And one, that's because of greed, most potentially, right? Greed is one of the major factors, in the market. Exits, trust me, exits are the most difficult. It's not even entries. Exits are really difficult because you're like, what's going to happen? I might be right and price might drop the shit low. Okay, just take for example, let me give you like a very nice example. Gold right now, right? Gold at this point is a very good example to use. Okay. Someone said for exits, I just chose stops. That's fine. When I close, you continue, and when I don't close, stop just coming. Psychology. Okay. Now let's say for example here, this cell that got into somewhere around here. Let me take you through how I manage my trade in this mode. How many pages is a trade plan? A trading plan? You guys want to know the funniest thing, yeah? Like, I barely write anything down. To be honest, like, I'm not too much of that kind of person. I used to be, but right now everything is just in my head. Basically, so I just do it according to what I need. So getting to this cell right here, alright? This was my target. This was my target. I never, like, to be honest with you guys, I never expected we were going to drop this much. Right? Look how much we dropped. I only thought this was my only exit platform. And because why I had that exit was because at the point I was bullish on gold. I think everyone can testify to that because I felt like we were gonna fill up all of this. I felt like we didn't make 50% full back as well and all this kind of thing. So I felt like we were gonna go bullish at some point somewhere around here. And so I was like, let me just sell here. That I'll call it trade. Okay. But what did I do at that point? Did I get here and then go against my plan because that's how I wanted to get out? Or what did I do? So here's what I did. Right? I stuck to my plan. As soon as price got to that area, I closed my trade. Like I closed the full position because that was already what I told myself. Okay, you know what? I'm gonna sell here and that's it because I don't know what's gonna happen. I have no idea. Nobody knows what's gonna happen. Only the market knows what's gonna happen. Alright. So at that point, when this huge drop just dumped, because I took two entries. I took this entry right here, and then my second entry is this one, which I took at midnight. One time like that when I was practicing, I just took at midnight. So price, is it that one? No, that wasn't the one I took. Maybe that's this one. So I didn't take this one. I didn't take this one. Now, when I took this trade, I watched price action here and understood the fact that this was a complex pullback and just getting liquidity and overflow. You see it on the 5 minute. Okay. So that day we had this overflow here, price to liquidity rejected with structure with this structure and then lower high will be, everything right there. So that dumped, and the moment that dumped, I took out my trade. Now the reason was because I already planned that I was gonna sell there and my wins were good enough. I had about 120 pips. Alright, and it was okay for me. So at that point, I didn't want to have greed come into play or whatever. Even if the market dropped a lot more, that was cool. Okay, it was here actually. That was in more than 120 pips. That was 200 pips, yes. So that was enough. 200 pips is enough for gold, trust me. Because that would give you over 20% of your account if you know what you're doing. So I had that, and that was my plan, and I exited. I didn't go against my plan. I didn't hold it because that wasn't my plan. I didn't decide to maybe buy something because that was not my plan. I just closed it because that was my plan. And the moment you stick to your plans, especially when you have where you expect price to drop to, you're going to start creating good habits for yourself. Because it doesn't matter for you to have greed and feel like price is going to shoot all the way down and then just have greed. Because what if price actually goes back up? No. Okay. So that is one thing. Now, understanding that if price is going to continue, I then told myself that I would have other opportunities to get into the market if I wanted to. And I don't know if you guys can remember, but at some point, I looked at the chart again and I knew that we're going to drop to 1820. And then I said in the public channel and told you guys that, okay, you know what? At this point, we're heading to 1820. So because of why I knew that was I had to take another look at charts again, seeing how all of these lows were taken and how we're broken that area. I then looked at the higher time frame and saw that all we had here was clean price action. We knew at that point that we're going to drop onto this area because all we had here is clean price action. So that's when Knowing that, that's when I looked at the re-entry to sell again, all the way down to 220, right? And that happened at me. Now, when I sold all the way down to 220, which is somewhere around here, I still didn't have grid coming to play. I went out of the market. Okay. So you see how I'm building healthy habits for myself and not having any psychology play with me. Because at that point, when I decide that I want to do what I said, that I want to do something else that wasn't what I said before, I'm going to start having confusion. I'm going to give room for confusion. That's the first thing. So I'm going to give myself room to now start thinking, okay, you know what? Do I now hedge this market and buy? Just to be safe, just so that if my sell doesn't hold, the buys will hold. But that is wrong thing to do at that point. Because why are you buying in a bearish market where you don't even know where it's going to stop? Right? So at that point, I just let it run. And I prepared for the next possible buy area, which is another demand, strong demand, or actually IPAs around here, which I saw from this liquidity grab and this order was taking. So I knew somewhere around here we're going to have some unmitigated order blocks, and that's why I took a buy from there. But what I did was I saw accumulation and timing, everything just made sense, and that's why at that point, because then, and I felt like it was time to buy, which was still just trading in the mob. All right, now psychology, a lot of psychology happened here for me because I started thinking, will buying really hold? What if I'm wrong? And what if sales do happen at that point in time? How do I get out of my buy if I'm wrong? How do I make sure that I come out of this trade with a very good win and not just a shitty win where price takes me out by holding it too much? Okay. So that happened again, and that's another exit, right? That's another psychology playing on the exit. So I got into buy, and I believe I closed my buy the moment I saw this price action right here. Just right here, when I closed my buy. Because the buy already broke higher highs and started to make uptrend directions. And then at this point, we rejected all the flow. Okay. But here, I closed partials. Now, I closed about 50% of partials and then just let the rest run because my entry was quite clean. So watching price make the way is made to the downside. At this point, I just had to wait because I saw liquidity, which is one, and then I saw an unmitigated SC that I felt could continue to push price up. And it happened luckily. Okay, it happened. So what happened was we created a new high, then we had a new low, going to a scalp buy, which I share with you guys. I believe all of us got this one. It's about 100 pips. Okay, now price got into a supply level. Okay, drop, please drop. And there was a rejection, a very strong rejection, and price broke structure. So the moment I saw this was when I closed out my entry. Even on this one, I didn't allow it to hold. I closed out on both of them on that point. Okay, and that is me accepting the fact that it is now time to get out of the market, and I don't need to stay into the market any longer because I'd seen price action and I'd seen that there's a probability that sales will still control because that's what the stronger move and this is weak. And then I exited the market. So you got to take note of knowing when to get out of the market. When things are starting to not go according to plan, understand that you could get out of the market. Okay?